Okay, we begin the day with positive cues. Looks like it's going to be a very strong start. But one stock on everyone's radar is going to be HDFC Bank. Post its numbers. Abhishek is here to give us the fine print. Abhishek, good morning. How did the numbers look?
Well, Sonia, they've actually surprised positively to the street expectation, especially on net interest margin, which was expected to be flat or decline sequentially as per analyst estimate. But net interest margin has improved on a sequential basis by 4 basis points, and also they've built a buffer in terms of provisioning from the stake sale in SDFC Credila. So net interest margin has improved to 3.44 versus 3.4%. They have made provisions of 10,900 crore from the stake sale money in SDFC Credila and the tax write back that they have got. LCR or liquidity coverage ratio has improved to 115% versus 110% in the previous quarter. Asset quality has also improved. Gross NPA ratio is down 2 basis points on a sequential basis. HDB Financial, one of the subsidiary, has reported the lowest gross NPA ratio in last 18 quarters, coming in at 1.9% versus 2.25% in the previous quarter. On the flip side, the risk weight to advances, that ratio continued to jump up for the second quarter in a row. It's now at 99.3% versus 97.6% in the previous quarter. They had a one-off in terms of employee expenses of 1,500 crore, which they have rewarded their employees as per the con call that management did mention. A provision buffer 10,900 crore made from the stake sale in SDFC Credila as well as tax write back. So in terms of PNL versus poll, NI is ahead of our poll, PAT is below our poll. Back to you.
Okay, all right, Abhishek, thanks a lot for that. Well, the street was sniffing a better than expected number. It seems the stock ended at the high point of the day on Friday. Well, let's talk about the other big name from the tech space. Rima joins us to tell us about Wipro. Rima?
Hi, good morning. So Wipro Q4 is in line with expectations, but they've disappointed the street in terms of their Q1 guidance, the guidance for the April to June quarter. So for Q4, the company has reported the 5th consecutive quarter for revenue decline. Constant currency revenue has fallen by 0.3% on a quarter-on-quarter basis, in line with expectations, though there is a positive surprise on the margins. EBIT margins for the company have expanded by 40 basis points to 16.4%. That said, the Q1 guidance is disappointing, minus 1.5 to plus 0.5%. Q1 will be the first quarter under the new CEO, Srinivas Pallia, and he has said his immediate priority is to accelerate growth, and he has come out with a 5-point agenda to bring back, revive momentum in the company.
Okay, all right, Rima, thanks a lot for that. Well, I'm looking at the cement names, UltraTech Cement as well as India Cement. And the reason I'm looking at UltraTech is for 2 reasons. But let's get to the common factor first. UltraTech Cement, they're going to be buying a grinding unit from India Cement. That's 1.1 million ton grinding unit. It'll be backed up by captive railway siding as well, which is always a good thing. And the total consideration they're paying is around 315 crores odd. Remember, it's only a grinding unit, so they're paid close to around $34 per ton, which is more or less in line with how much you pay for a grinding unit. How much did it contribute to India Cement? Well, it contributed a little less than 5% of the total revenues. But why did India Cement sell this? There are 2 factors that play out. One is the sourcing of clinker for UltraTech Cement will be more favorable in comparison to India Cement. You require clinker to run a grinding unit. So that's why that could be one strategic decision. And the other factor is India Cement is sitting on a debt of close to 2,700 crores. So it will help them in terms of easing off some part of that debt as well. The second news point is UltraTech is saying they're going to go ahead and they're going to add grinding capacity. And the total grinding capacity they're talking about is close to around 3 million tons. So 1.2 million tons will be added on to this 1.1 million tons unit that they bought from India Cements. And besides that, they're looking at around 1.8 million tons additional as well. The total capex they'll be spending is around 504 crores odd. So you just put the numbers in, they're spending close to around $20 per ton for this grinding facility of around 3 million tons approximately. It'll be viewed positively for UltraTech Cement because they're headed towards the 200 million tons that they've been talking about. And for India Cement, it's freeing up some cash. So that's why good for them as well. Expecting green on both those stocks.
Okay, expecting green on UltraTech and India Cements. Let's hop across to Ekta now. She's going to talk about Lupin this morning. Ekta, hi, good morning.
Well, I'm going to throw in Zydus as well because both of these companies have announced the launch of the 25 mg strength of a particular drug called the generic version of Mybetriq. It is a drug which is used for an overactive bladder, and Lupin in their press release has indicated that the 25 mg strength sales in the US is around $1 billion. Now, Elara has written on it, they say Lupin and Zydus launch is likely to be a part of a settlement. We could see more competition come in. We could probably see Aurobindo launch the 50 mg strength on a future date as well. They've built in $33 million to around $38 million of revenue from this drug for Lupin, Zydus and Aurobindo in FY25. So I expect Lupin and Zydus to be in the green. Let's see how big the gains would be, considering that there's already competition coming in.
All right, Ekta, thanks very much for that. Well, Persistent Systems is the next one that we're focusing on. Reema's here with details. Reema, morning.
Hi, good morning. So Persistent has reported another good quarter. The company's top line has grown by 3.4% quarter on quarter. They've ended FY24 with a top line growth of about 14.5%. And this compares with the low single-digit growth for Infy and TCS and a negative growth for Wipro. But that said, Persistent has been amongst the fastest growing, IT companies, and they've navigated this volatility well. EBIT margins, though on versus expectations of an expansion, have remained flat at 14.5%. Deal wins are fairly healthy, above $400 million. Attrition continues to moderate, and this is one company where the headcount is still going up because most peers are bringing down, cutting back on their headcount. But for Persistent this quarter, about 500 million increase in their net employee headcount. Back to you.
Okay, thanks a lot for that. Well, Vamakshi is joining in to talk about HDFC AMC and why you should be watching that one. Vamakshi, over to you.
Well, the stock is in focus on the back of its numbers. A mixed set from HDFC AMC. Revenue was a slight miss, but the bottom line was higher than what the street was expecting on account of higher other income as well as lower taxes. Now, when we look at the quarterly average AUM, that has seen an uptick of almost 11% sequentially. The market share has also improved marginally to 11.3%, but the revenue yield that has come off a bit, down almost 3 basis points sequentially, and this was mainly on account of a one-off impact due to fall in TER of some of the schemes. The net profit saw an uptick of 10% sequentially, and this was higher than what the street was expecting, and that was mainly, like I pointed out earlier, was aided by the other income as well as lower taxes. Now, we have a couple of brokerage notes that came in on HDFC AMC. Axis Cap has retained a buy rating, but they've gone ahead and raised the target price from 4,300 to 4,425 rupees per share. They believe that on a sustainable basis, the yields are expected to moderate, but the AUM growth will drive the earnings for this counter. And in fact, they've gone ahead and increased the FY25 as well as 26 EPS estimates by around 3% on the back of better AUM growth. Other than that, lastly, Prabhudas Leeladhar has also retained a buy rating. They've also gone ahead and increased the target price from 3,900 to 4,100 rupees per share.
Okay, all right, Vamakshi, thanks for that. Well, let's go back to Abhishek. He's here to tell us about IRDA's numbers. Abhishek?
A strong AUM growth, but that's not translated into meaningfully PNL growth. AUM growth is at 26.8% YOY and about 18% sequentially. Asset quality in terms of gross NPA ratio has improved sharply to 2.36% versus 2.9% in the previous quarter. Net interest margin is up on a YOY basis. The NII growth is at 35.3% YOY and 7.5% sequentially. Provisions are down massively by 81% YOY and 75% sequentially, which has helped the PAT to improve marginally by 0.4% on a sequential basis. Back to you.
Okay, Abhishek, thanks very much for that. GSPL should be in focus, I think, on the downside as well. Sonal is here with details. Sonal.
Well, yes, there is some negative news which is coming in because the PNGRB has gone ahead and cut tariffs for one of its main pipeline in Gujarat, which is the HP pipeline. And the cut is massive. It has been cut by 47% to 18.1 rupees per MMBTU. In fact, GSPL had asked for a tariff around 50 rupees per MMBTU. But there have been changes in macro since then as well in terms of gas prices. And the PNGRB has also taken into consideration different volumes. So that's why the cut has come by. Street expected a cut of around 10 to 15% basis the changes in macros that we've seen, and management said that it is studying the order right now. And remember, the EPS cut that will be because of this tariff cut will be around 30 to 40% in FY25, and that's why I expect a red on the stock. Also, Gujarat Gas will be in focus because GSPL holds 54.2% stake in the company.
Right, Sonal, thanks a lot for that. So negative news there, but also negative news for Ramkrishna Forgings. If you remember, a couple of days ago, they had announced a big order from the largest passenger vehicle EV manufacturer in the US. So the stock had rallied quite a bit. Now, a couple of days ago, they put out a release saying that that order has been put on hold. Now, we do understand from company sources that the order was from Tesla, and the order from Tesla has been put on hold. There's no reason cited for, why this order has been put on hold. So more clarity awaited from the management. But the earlier discussion that we had with Ramkrishna Forgings indicated that the order was for 8 years, and they are looking very keenly at opportunities in the electric vehicle space, not just in the US, but in Europe as well. They were sticking to their margin guidance of 23%, their volume growth guidance of 15 to 20%. But now, post this order, do they change that guidance anyway? We'll have to find out from the management. A lot of analysts that I spoke to are saying that because, Tesla is undergoing a bit of an issue where they're cutting costs, they're laying off their global workforce, sales have fallen. That could be one of the reasons why they have put this order on hold, but there's no official confirmation on that. But I'm expecting the stock to open in the red today because of this order put on hold. But yeah.
Okay, all right, Sonia, thanks for that. Well, here's a quick recap of all the top stocks that we just discussed for you. The ones with positive news flow include HDFC Bank, UltraTech Cement, India Cement, Lupin, Persistent Systems, HDFC AMC, and IRDA. While stocks with negative news flow include Wipro, GSPL, as well as Ramkrishna Forgings. Those are about all the stocks that we'll be tracking. But as always, let's get in Manisha Gupta. She's joining to tell us what's going on in the commodity space. Morning, Manisha.
Morning, Nigel. Thank you for that. I'll start with the crude oil prices, where we have seen some more decline coming in, and this is after 3.5% of a cut in the previous week as well. Well, the Iran and Israel tensions kind of de-escalating have taken the premium off the prices, and then the expectation that the U.S. Fed will not cut rates until the month of September seems to be weighing on as well. The markets also are looking at the latest U.S. oil production data, which is at record highs, and the U.S. inventories also gained up by 2.7 million barrels. That is weighing onto the markets as well. But it's not just energy. The precious metal prices also have finally come under some profit taking after that one-way rally and string of record highs that the gold prices were trading at. There is a wild support from geopolitical tensions, but the prices have seen decline due to one, profit taking, and then Fed rate cut expectations now to the second half of this year. There also is the strength in US dollar and yield that seems to be weighing onto the markets. So while gold is trading well below 2,400, silver has seen a percentage point of decline as well.
Right, Manisha, thanks very much for that. So that's commodities and precious commodities in focus. We'll take a quick commercial break here. Prakash Devan will be here. We talk specific stocks, HDFC Bank, Wipro, and many others with him. We also have an exclusive chat lined up with Wipro's top management, where they discuss the company's fourth quarter performance. Stay tuned for that as well.